Hi, this is Lynn and welcome back. Today we're talking about two very exciting low-cost biotech stocks with catalysts coming up still this quarter that you'll want to know about and watch out for, because as we know, biotech stocks, when they have great news come out, can run up quickly in price. So you'll want to keep an eye on both of these. But remember, this is not financial advice, but my opinion only, so do your own due diligence. And before we get into these stocks, remember to give this video a like and subscribe for more videos like this one. So what's really great about these two stocks is one has one-year target set by analysts of over a 100% increase, and the second, which is under a $1 penny stock, has an analyst target set for more than a 700% increase in a year. So let's look at those catalysts. So first of all, let's take a quick peek at the sector spider report. This is really interesting because it will tell you which sectors are doing really well right now, and particularly over the last 5 days. And it's interesting to see how well healthcare is doing. So you can see on this sector spider report that the vertical sectors that do really well with inflation have done very well over the past 5 days. Those include consumer staples, energy, which of course is also being influenced by the oil hit due to the war in Ukraine. Also, you see healthcare stocks are doing better, which is probably something to do with the COVID recovery as well, and more money flowing into them and people being available to work in those areas. And also with the aging population, and utilities tend to do really well in times of inflation because people still have to have their heat and pay their bills. So let's look at our first article on the first stock we're going to cover today. That stock is Contrafect, ticker symbol CFRX. So Contrafect is a clinical stage biotechnology company focusing on discovering and developing biologic therapies for life-threatening drug-resistant infectious diseases, particularly those treated in hospital settings. An estimated 700,000 deaths worldwide each year are attributed to antimicrobial resistant infections. Our initial product candidates, the company says, are new agents to treat lethal resistant infections such as methicillin-resistant staph, MRSA, and gram-negative pathogens like multi-drug resistant MDRs. In looking at Contrafect's portfolio and where they are in the phases, we can see that their main drug, Expicase, is in phase 3 right now, and you can see the study is related to Staphylococcus. Also here you can see some other areas that the drug is also covering. Their lead license, Expicase, is an investigational product candidate that targets staph, including MRSA strains, which cause serious infection. Expicase is currently being studied in ongoing pivotal phase 3 superiority design trial known as DISRUPT study. The phase 3 DISRUPT study of Expicase is a phase 3 controlled clinical study conducted in the U.S. to assess the efficacy and safety of the drug in approximately 350 patients with complicated staph bacteria problem. But the market is really exciting, so we'll look at that. So drug resistance is a global problem. We hear about it all the time on the news. So 2 million illnesses diagnosed in the U.S. for MRSA, 700,000 in the U.S., and 64% likelihood of death among individuals with MRSA versus those infected with MMSA. That is a huge problem and a very large potential market for this medication. It's a big killer among people that have hit immune systems with HIV, AIDS, Parkinson's disease, and more. The projections for 2050 are 10 million deaths annually and 100 trillion costs by 2050 from this issue. So let's look at an article about CFRX, the futility analysis for DISRUPT trial in the first half of 2022. So we know they're currently conducting a phase 3 DISRUPT study, And it's being conducted in over 40 centers in the U.S. and will enroll approximately 350 patients, which we mentioned, randomized 2-to-1 to receive either expicase or placebo, with all patients receiving standard of care antibiotics. They currently anticipate results from the interim futility analysis in the first half of 2022. So that means April, May, or June we'd see those results. Now let's look at the Yahoo profile for this company. You can see that the price is 383 cents per share, so this is a very inexpensive stock, and their year-to-date stock chart shows that the stock has been increasing nicely over the recent past. And looking at their market cap, they have 149 million market cap. They don't have a PE ratio because they're not making money yet. The average volume is only 77,000 shares per day. I love finding stocks that other traders haven't discovered. This is a very lightly traded stock, so it would be easy to move on good news. What's even more exciting is looking at the TipRanks forecast for the stock based on 5 Wall Street analysts covering 12-month price targets for Contrafect. They look at a target price on average of $8.17. That is 113% change from the current price. So that's something to look out for. So you have 2 things to watch with this stock: the catalyst that will happen in April, May, or June, and the 12-year price target, if you feel comfortable at some point jumping into the stock. Also, when you look at the news, it's been 100% bullish for CFRX as far as news that have come out on the stock. Let's also look at the FinViz profile for Contrafect because it gives us a lot of insight into the stock. The insiders own 4.87% of the stock, which is a small percentage, but institutions own 63% of the stock, which is very impressive for a company of this size. So they have confidence that the stock will be making money at some point, or they're betting on it anyway. Standing shares are 39 million shares, and they have a float of 37 million. That's definitely moved easily on good news. The short float is 6.19%, which is a little higher than I'd like to see, but a lot lower than OTC stocks, for example. And the target price for the stock they show here is $11.92. Now you can see on the right the performance recently for the stock. Year to date, it's up 46%, which is really nice. For the month, it's up 22%, but the performance is down slightly, just under 1% for the week. Now we'll move on to our second stock, which is really exciting because the stock is under $1 in price, and the analysts give it an enormous 12-month price target. So the name of the stock is Athersys, ticker symbol ATHX. So it's a clinical stage biotechnology company developing novel and proprietary best-in-class therapies designed to extend and enhance the quality of human life. They're developing MultiStem, a patented adult-derived off-the-shelf stem cell therapy platform for disease indications in areas of neurological, inflammatory, and immune and cardiovascular disease areas, as well as other critical care areas. And looking at their clinical pipeline, their most advanced program is exploring the treatment of ischemic stroke, which represents the leading cause of serious disability in the United States. Well, my mother died of a stroke. The potential for MultiStem to treat ischemic stroke is currently being evaluated in a registrational trial in Japan by collaborative partner Helios, and in a pivotal phase 3 clinical trial being conducted by the company primarily in North America and Europe under an FDA special protocol assessment, which is huge that they got that assessment and approval. In addition, this program received the Fast Track designation as well as the Regenerative Medicine Advanced Therapy, or RMAT, designation from the FDA. No wonder why analysts have confidence in this stock. You can see here their phase 3 for the ischemic stroke application for their stem cell therapy. The potential of multi-stem cells to address chronic conditions such as multiple sclerosis or Parkinson's disease is enormous. Next, let's look at TipRanks analyst forecasts for this stock. So for ATHX, they show an average target price of $4.33. from the current price of 55 cents, which would be a 694% increase from the current price. This is a 12-month price target. So there's some real believers in this stock when it comes to analysts. But remember, I think analysts tend to be very optimistic. So make your own decision. In looking at their year-to-date stock chart in Yahoo Finance, you can see there was quite a bump in price on April 11th, and then a slide back down to 54 cents recently. They have 136 million market cap, no PE ratio as they're not really making money yet, and their average volume is only 2 million shares per day, quite a bit more than the previous stock, CFRX, but still a fairly low average volume traded per day. And they also have an earnings date coming out you'll want to watch for on May 4th to 5th. Another exciting article that came out was just on April 4th about Athersys. They're nearing the end of a 15-year journey to commercialize adult stem cell therapy multi-stem. And the Cleveland company said that its Japanese partner has completed follow-up examinations of ischemic stroke patients who were treated with multi-stem, and the partners expect to announce their trial results in May. If results are favorable as expected, Helios then would apply for regulatory approval to sell multi-stem in Japan. That would be huge. So what makes it unique? Unlike many other conventional drugs, the product is cleared from the body over time, which they believe would enhance the safety relative to other types of stem cell therapy. You would certainly think so. What's exciting is that Zacks recently published an article talking about stocks to consider, and they mention Athersys ATHX stock, and their consensus estimate for Athersys earnings have been revised 21.7% upward for 2022. Earnings of ATHX surpassed estimates in one of the trailing 4 quarters and missed the same on other 3 occasions, delivering an average earnings surprise of 25%. I'd love to hear your comments below about CFRX or ATHX. I'd also love to hear about any other stocks that you are liking right now or that you'd like me to review. Make sure and go here and sign up for our newsletter so that you can be notified before videos like this come out, as well as any surprise movements in the stock market. Next, make sure and go here to look at our recent videos on ILUS and Sybil, as well as some momentum stocks that are moving quickly due to the changes in interest rates rising as well as inflation.